Let's get across the market open. David Lane joining us now from RBNZ. David, welcome to Wednesday. Great to have you back on the show. Now, of course, Donald Trump front and centre, as he likes it, given his new tariff regime. Copper now in the mix.
Yeah, absolutely. We've seen that Donald Trump has changed his focus from dropping bombs on Iran to dropping bombs on other countries in the trade wars. So yes, we've seen that although the delay is delayed slightly till the 1st of August, he seems to be now back in the frame, holding steady on a number of countries. Australia in general 10%, but as you mentioned, the big ones that will impact Australian companies, the 50% tariff on copper, and also talk of a 200% tariff on pharmaceuticals. So certainly a couple of concerns in the market over the last couple of days.
What are your thoughts then on the Australian copper producers? Obviously, you've got the bigger miners such as BHP and so on. Bearing in mind also the copper price itself jumping about 10% on that news.
Yeah, and that's the thing is, for BHP and Rio, they're the two biggest miners. The majority of their copper actually goes to China and to other countries in Asia. So we're not significant exporters to the US, although they're both joint venture partners in the Escondida mine, which is the largest copper mine in the world in Chile, and that does export quite a bit into the US. So they will have some impact, but as you said, the copper price rising will be a bit of a benefit to them as well, and particularly when they're exporting into China. So yeah, positives and negatives as far as BHP and Rio are concerned, but I wouldn't be surprised if we see the share prices a little bit weaker again today. We saw them off yesterday, and they are getting into buying territory at current prices, so it's probably one to keep an eye on. Not necessarily dire situation for BHP and Rio, but could present an opportunity for investors.
And we also need to keep our eye on pharmaceuticals, because that appears to be the next cab off the rank as far as Donald Trump is concerned, with a potential 200% tariff.
Yeah, it does. And certainly there's not too many details around that. And Australian companies don't necessarily export too many pharmaceuticals to the US, but it is a sector under watch. And of course, in Australia, we have the PBS, which has been mentioned in the US and by Donald Trump and by his team in the past as being a negative that the Australian government effectively subsidises a lot of the purchases of US and other pharmaceuticals. So that could well go against Australia as far as the pharmaceutical industry is concerned. And I guess really that the other key concern for Australians is that we really don't seem to be at the negotiating table. So we've got the 10% tariffs right across the board, but there doesn't seem to be a dialogue between our government and the US government. So potentially we could just be slugged with the 50% on copper and 200% on pharmaceuticals, and we have no negotiating.
Yeah, well, the Prime Minister maintains that they have that channel open. He seems confident that it's going to remain at 10% across the board there, but we'll wait and see. David, now, what's your expectation for the local market, bearing in mind what we've heard in regards to tariffs, but also, I guess, reaction to the non-move by the Reserve Bank, which certainly wrong-footed markets?
Yes, it did, Andrew. It was certainly a surprise to most in the market. A lot had priced in the potential rate cut yesterday, and most economists had predicted that would occur. So, Michelle Bullock and the team at the RBA are more cautious and concerned about the fact that we haven't really seen enough data to justify whether or not inflation is on the trajectory that we all hope it to be. So they've really said, look, we just want to wait until August. We want some more data to come through. And no doubt they're obviously thinking about the uncertainty around tariffs as well, to see what impact that might have. Locally, we've seen, or globally, we've seen the oil price stronger in recent months, and that's been hitting the petrol houses as well. So that feeds into the CPI. So, wrong-footed a lot in the market, and I think we could well see a negative impact again today. That the combination of the no rate cut plus the uncertainty around the tariffs at a time when our market is very expensive, I think that it's likely that we see that the market sell off a little bit today.
David, you mentioned petrol Bowsers there. I see that you've added Ampol to your value conviction list.
Yeah, we have. Ampol is a good business. One of the benefits that they've got in the current conditions with the lower exports to China and the higher prices is that it means that the refinery margins that they get for their oil refinery in Australia should be improving. Ampol has got a very, very strong balance sheet. They've delevered that, and there's increasing talk about Ampol potentially looking at special dividends or other sorts of capital management structures. So it really underpins their dividend yield. At the moment, dividend yield's about 3.2%, but we've got that going. It's 3.5%. We've got that actually going up to about 8.8% in the next financial year, fully franked, so that there is the potential that we get either special dividends or a significant increase in the dividends. So it's one of the reasons that we've added Ampol to our value list.
Elsewhere, you've added the Lottery Corp to your core conviction list. Why is that?
Yeah, the Lottery Corp has been the dominant player in Australian lotteries for a long time. They've got the monopoly outside of WA. Everywhere else in Australia, they've got the monopoly as far as the news agents are concerned. And they're one of the two players that deliver lotteries and Keno via the online channel. They've seen a significant increase in the online channel. Also, they've had some fairly aggressive price increases. So for that, we're actually forecasting growth of about 20% per annum as far as earnings per share growth, and think that at current levels it represents good value and should continue to deliver long-term growth.
All right. And also in the small caps, Bubs, what are you liking about it?
Yeah, well, Bubs is a bit of a turnaround story. They've had a lot of issues in the past, but we believe that those issues are well behind them. Management is well in place and very experienced. They've been moving more closely to FDA approval in the US. So they've been through a growth monitoring program and heading towards that FDA approval. So they've got a fairly strong market in Australia, in China and other parts of the world, looking for that growth into the US. And we think that the management has done a really good job of turning that business around. They've guided as far as their revenue and EBITDA are concerned. So we're fairly confident going into the reporting season that they're in a good position. And we're fairly convicted that their turnaround is well underway.